And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Lots of themes are continuing to play out this week. Let's take a look at and talk about some of that data that drove price action. First up was the fact that we got two key inflation data points. That PPI, producer price index number, came in very light. And that certainly was good news. We want inflation to be receding so that the Federal Reserve can support lowering interest rates. Now, we did get later in the week CPI data, and that came in strong. However, it was on Thursday. It was the same day as we received weekly employment data that was very weak. So hence, not as much weight was given to that strong CPI number. And at the end, there is a very strong sense that we will see the Federal Reserve lower interest rates next week. And that announcement will come out on Wednesday. And of note is the fact that there are going to be two more meetings into the end of the year. And at this time, investors are considering that we may see more than one just rate lowering, and that would be very good news for the broader markets. What we can do is take a look at the impact there, but even more impactful upon a certain industry group was earnings from Oracle and the CEO's comments regarding growth for the company going into 2030, all about AI. Lots of other bullish AI related news was released as well. So let's go ahead and jump right in and take a look at the impact that that had on several different industry groups. And here we are, daily price chart of the S&P 500. And we had a nice advance up more than 1.5%, sitting at another new high. We have a nice positive RSI, nice positive MACD. Overall, we are very much in a confirmed uptrend. Now, from here, let's go ahead and take a look beneath the surface of the S&P 500. We want to take a look at the sectors beneath the S&P 500 and the broader markets. And of note is that we are looking at a 2-month daily price chart view of the 11 sectors with the S&P listed as well. So from here, I'm going to add a relative strength indicator and sort the sector in descending order. For those of you that watch this weekly, welcome back. You will note that this movement among these sectors is very gradual for the most part. You're not going to get whippiness where a particular sector is down in this very weak lower quartile and then it jumps. Now, what we are seeing is communication services up here at the forefront. XLC up quite a bit this week, 2.5%. And leading that was internet related stocks. And certainly Google, Alphabet would be among them due to the fact that their possible lawsuit has been put aside. So that particular name was able to move quite a bit higher. But there were other internet related names that fared well also. One of them is on my MEM Edge suggested holdings list, and it's been really quite an outperformer, poised for further outside. If you'd like upside, if you'd like to view that, there is the opportunity for a free 2-week trial. You can use that link below and you will see any number of AI related outperformers that have been on our list and are still in very confirmed uptrends. So from here, let's go ahead and take a look. The S&P 500 sitting up here at the forefront. This, of course, is not the equal weighted. This is the broader S&P 500. We can go ahead and take a look at XLY. Now, this group was mixed this week, this sector. This is consumer discretionary. However, you can see we are sitting up here at a new high. This is quite frankly a lot to do with Tesla's broad advance. We're going to take a look at Tesla later in the show today because they did come out with news not just about their electric vehicles, but beyond into robotics. And a lot of excitement was generated around that. Now, we did see rather mixed news relative to the retail space. We will get into that as well. But let's go ahead and move through and take a look at some of these other areas up here at the forefront. Now, technology had been languishing here, suffering a bit, but you can see this nice gap up and a breakout to a new high. Now, this was all about Oracle's news, in turn, driving a number of other stocks in this sector quite a bit higher. We're going to take a look at a couple of industry groups that regained their uptrends within technology. Also of note is super high volume on this advance. And then also, not only is the MACD above this net neutral, but it's now trending upward. And oftentimes that does signal a new uptrend. Lots of excitement around AI stocks. And then we can also see that RSI trending upward, but not in an overbought position, indicating and signaling that we do have further upside potential. And from here, I can take a moment and share with you a view of the S&P equal weighted index as well. And of note, the reason I'm highlighting this is because this particular equal weighted S&P 500 chart also talks about the impact of lower interest rates on the broader markets. And so if we go back historically to periods where we've seen nice uptrends in the markets, it is as those broader interest rates are coming lower. So let's go ahead back to these ETFs that are really within these sector view and take a look at some of these other moves that were taking place last week. Here we are with XLU. This is the utility sector, all about the need for energy for these data centers, AI related data centers. And you can see we have this nice downtrend reversal. XLU closed back above its moving averages. We have a now bullish RSI, and then we have that black line up through the red on the MACD. So very constructive. I will share with you a few names in that area that are renowned for being certainly AI related and are reversing their downtrends. XLF, it was certainly in line with the broader markets as far as performance. You can see this nice move higher here. I will share with you a couple of these broader bank names that are faring well. Also will share with you why, but there was one particular area within financials that fared well this week, and that is cryptocurrency. We're going to take a look at names in that area, and I'll also share with you why crypto is on the move this week. XLV, this is the healthcare ETF, and it did underperform. However, of note is the fact that we are now back above this 200-day simple moving average. We do have a positive RSI and a positive MACD. Now, you will need to be selective within this group, but we are seeing some of these bigger pharmas start to awaken. So that was certainly notable last week. As we move through, also, I will share with you a name in the retail space, REIT, that is AI related and faring well. We came very close to a nice base breakout, on our way to a potential base breakout of a longer nature at that 43 level. REIT stocks do tend to fare well in a declining interest rate environment. This first move this week, however, was primarily AI related. And also we did see basic materials. This is going to be all about gold, copper, other metal stocks moving higher this week. We'll take a look at that gold chart because it's continuing to advance. And this is another area in a declining interest rate environment that will fare well. Now, of course, you do want to be aware of areas that are not participating. This is XLP, consumer staples, down about 0.5%, not an area that you would in any way want to overweight. And then also we can take a look at XLI. This is the industrial sector. Now, this sector was rather mixed this week. It is viewed as a highly economically sensitive area, but there was one area in particular that is outperforming, and it's all about data centers. I'm going to share with you a couple of names there as well. So let's go ahead and move beyond these ETFs and take a look at the other ETFs. And now this listing is quite a bit more diverse, and they are ETFs that I find to be super helpful as far as being able to drill down deeper, get a better sense of where that strength is, where that outperformance is shaping up, so that you can participate in that strength. So here we are with gold. I talked about the group sitting up here at a new high, looking quite bullish. Now we are in a bit of an overbought position, but I will tell you from research reports that I garner from Wall Street analysts, they are anticipating gold to continue to advance higher. And also, I will tell you, we can maybe, yes, we will take a quick look at the seasonality of these metals. So here we are with a weekly price chart of gold. Highlighting this because we do also have an overbought position on that RSI on the weekly, but also notable is that it can retain an overbought position and continue to advance. We're just seeing this black line up through the red and nice high volume. Your weekly chart is going to be super helpful as far as guiding your intermediate term investing. Let's take a look at another group up here at the forefront, and that is semiconductors, all about AI. I talked about semiconductors regaining their uptrend. This is SOXX, the ETF. And we did have that nice base breakout after Oracle's earnings, and then a continued advance. It was the top sub industry grouping of those that I follow. It was up over 3.5% last week. Super nice volume on that advance. Nice black line up through the red, and RSI in a bullish position. And again, for those of you subscribers to my MEM Edge report, you will know all about this move into semiconductors. We do have those leadership names, and over the weekend, I will talk more about these semiconductors and determine whether the near-term upside is still a possibility. So let's take a look at small cap stocks. The group did underperform, but we are in a very nice uptrend. And again, this is all about a declining interest rate environment, which is definitely a bullish backdrop for these small cap stocks. And if we have time, I will share with you how you can get in front of those winning names using stockcharts.com's very easy to use tools. Now, moving through as it relates to technology, we did see software stocks very eloquently regain their uptrend, and this is good news. You can see Oracle is among those software stocks, and it did gap up into this base breakout. We pulled back a little bit beyond that. This is an area where you will need to be selective as it relates to the software names. Not all names are participating, but there are a lot of names setting up in this area. You can see that RSI above 50, generally trending higher, and we now have a bullish MACD. So take a look at those software names for sure. Let's go ahead back and move through some of these other areas. Bank stocks were a bit weak last week. KRE, and you can see this move here. Not a whole lot to talk about there with that MACD black line down through the red. But again, there are vibrant areas within this banking area and very, very sound reasons as well. You'll, from my work, want to know why a particular area is advancing so you can determine whether it has legs. Let's take a look at XRT. I talked about retail stocks, and this particular group did pull back a little less than 1% this week. A lot of that pullback coming today. We did get a couple of names that reported earnings that with outlooks that were not as bullish as anticipated. But again, this is an area where I'll share with you strength versus weakness going beyond that ETF. Now, let's go ahead and move through. And I did want to share with you, this is an area I had been highlighting for about 2 weeks. This is TAN, the Invesco Solar ETF, and it did pull back. Now, of note is that we had a very sharp advance, and upon this week's pullback, we do still have a positive RSI and a positive MACD, but I do believe I mentioned this last week and the week before, the fact that these solar stocks are highly volatile. And quite simply, we can see from this chart that is, in fact, the case. And a lot of it has to do with the fact that a number of these solar stocks are going to be news related. Are there tax advantages and some of the other factors that go into their potential profitability? Let's go ahead and take a look at an area that faltered last week. This is IHI, the medical products ETF. One of the primary reasons that we did see XLV pull back. And then also we did see biotech stocks pull back a bit here. IBB down a little bit less than 1%, but still very much in that confirmed uptrend. So you may want to consider buying on that pullback, depending on how confident you are in the names that you are looking at. And then last up, we will take a look at the yield on that 10-year treasury. And you can see this sharp drop as investors are calling for, I believe it's now up close to 100% as far as the possibility of an interest rate cut next Wednesday. You will also want to pay attention to comments that Fed Chair Powell makes, as well as that actual decision. So let's go ahead and take a look at a feature on stockcharts.com. And I'm going to just go ahead back one. Okay, well, you can see how I was going through the whole list. But what I did want to share with you is the ability on stockcharts.com's major page to access seasonality. And oftentimes that can be used for individual stocks. And what you will see is how a particular area fares on a given month going back over the time period that you specify. So in this case, we're looking at GLD gold going back over 5 years. And this area here is where you can go ahead and modify that. Perhaps you want to go back 10 years. We did have 2 bear markets over the last 5 years. There might be reasons that you want to go back a particular time period. But what I did want to highlight in looking at gold, copper, and these other metals is the fact that October really stands out as a stellar period of outperformance. I would say it could have to do with uncertainty potentially around November elections, but we only have that every 4 years. But it is certainly something of note. And again, you can put in any ETF or particular ticker symbol and get a sense for the seasonal performance of that particular stock. Now, from here, I do want to share with you, I talked about the fact that we are seeing mixed movement among the discretionary area, but let's take a look at Tesla's chart. And what I wanted to highlight for you here is the fact that we did have a nice base breakout taking place on high volume. So from here, I'm going to go ahead and outline this particular base. I've talked about this a lot, the fact that the longer that base from which you experience a breakout, historically, the longer or higher your advance out of that base. So we are seeing nice high volume on the breakout. I talked about the news driving it. It's more than their vehicles. And we can also see that we can use other time periods as historical precedent. And that's going to become really most important as far as identifying when a stock is pulling back and when you can signal and see that it is more than just a pullback. In fact, I am reminded that I will be rolling out a 5-part course that's all about how to identify big winning stocks that go on to outperform, but more and most importantly is being able to identify that exit point depending on your investment horizon. I will leave a link below and you can get on the list to be alerted to course certainly details, and then also I'll be doing webinars regarding areas of the broader market that you'll want to be on top of as well. So let's go ahead and take a look at another area within the retail space that is not really faring well, and it's widespread. Here we are with Wingstop. The company initially had a gap up on earnings, but very quickly gave that up. You can see this very swift deterioration. Again, this is all about knowing when to exit. And I will tell you, as it relates to Wingstop and a number of other couple of other names that we're going to look at here. You will want to pay attention to those peer stocks. This is Chipotle that came out with earnings after Wingstop, and you can see this gap down and the fact that we had negative momentum indicators, high volume, and a continued deterioration. So one of the metrics you will want to pay attention to in the restaurant space are same store sales. So let's take a look at another stock that is faltering. CAVA. This is a name that I had on the MEM Edge suggested holdings list very briefly, but I did remove it as the stock began to deteriorate prior to earnings. So we were able to avoid that significant deterioration there. And one last name in that space, Shake Shack, another one coming out with numbers. So generally, when you are looking at a stock, you are going to be well served to take a look at peer stocks. So as an example, we're going to shift out of consumer discretionary into financials and into some of these larger banks that really perked up last week. This is Goldman Sachs, GS, and you can see this nice base breakout that took place earlier in the week, and then a nice uptrend. Take a look at that MACD crossover. Another name that we can take a look at in this space is Morgan Stanley, also in a nice uptrend. I do have a peer name on my MEM Edge report, and this is all about a company that one of the majors that came out and pre-announced that investment banking activity has been at record levels. And these companies that are bigger and they provide a lot of activity within the capital markets are benefiting from that expansion. And other areas AI related that are not necessarily semiconductor, these are going to be more of those that provide services needed, are also beginning to reverse their uptrends. This is Eaton, ETN. They allow companies to monitor their electricity activity and somehow farm it out so that there are not blockages, and among many other features. But more importantly, with this chart, you can see that we've closed back above that 50-day simple moving average. We have a nice positive RSI, and there we are with that MACD poised to turn positive. Another area in this particular space as it relates to AI related, I did talk about a REIT name that many of you may be aware of. It's Prologis PLD. And this particular company for years was renowned for their warehouse and their capabilities as far as storing and transporting goods for retail companies. I'm pulling up a monthly chart so you can see that the stock over the years has had a very sharp advance. And certainly over the last several years, it has been in a go nowhere environment, having to do partly with the fallout within retailers, but more importantly is the fact that PLD has pivoted. They are and have announced for some time now getting into data center. They have these already built warehouses that are capable of being turned into data centers. So this is an area of interest, but I don't believe we're quite there yet. You can see the volatility inherent in this particular stock. What I would do is go ahead and this is a weekly price chart of PLD. So I would take a look at that daily chart, and you will see that again, it is volatile. That's certainly of note, but it is in a certainly more bullish position over the near term, poised for a potential 122 base breakout. Let's take a look at other names. I talked about the industrial space, and I will highlight a couple of stocks in this area that are AI related. Perhaps they provide temperature control features. This is FIX. Caught my eye. It's coming out of a nice flat base here, gapping up, nice high volume. So if you're able to weed through these industrial stocks, you will be able to see names that are very focused and are seeing growth because of that data center movement. STRL has been a winner here as well. This is an infrastructure stock, and take a look that we are experiencing a nice base breakout this week, positive RSI, and then that black line up through the red, signaling a downtrend reversal. Next up, let's take a look at this initial interface page for stockcharts.com. And from here, you can look at the market overview very easily. Equities, you can get a sense of where there may be strength or weakness on the day. Bonds, taking a look at yields, they were up a bit today. But what I want to focus on at this time is crypto. We did see a nice move, certainly today. Ethereum has been highly touted as the name of choice. I'll share with you why and ways that you can participate. This is Ethereum to that US dollar advancing here. Now, of note is that we did get two IPOs this week. In fact, today we did see GEMI. This is Gemini Space Station. Many of you may be familiar with the Winklevoss twins that are very much into cryptocurrency, but they had an IPO that actually jumped quite a bit. It did pull back. You will want to look at this a little more closely, but the fact that we are seeing these successful IPOs in the cryptocurrency space is quite bullish. And Gemini does provide a digital access exchange. Another IPO that came out was FIGR. Not sure how that will, but of note certainly is the fact that these IPOs are being generally well received. This particular company does provide investing activities for digital assets. But from here, let's go ahead and take a look at Ethereum and a couple of ETFs by way that you can potentially participate in the move into Ethereum. This is ETH-USD, a stock that I've owned for a bit here. And the fact is that Ethereum is really being embraced by corporations and their treasury departments. Most notably are going to be tech companies and gaming companies that are at the forefront. And the Ethereum is a market where, in addition to the price appreciation, you can also gain because they offer what's called an active yield or rewards. So most importantly, among all those sentences is the fact that corporations are embracing Ethereum as a solid cryptocurrency coin. So for my work, that would certainly be of more interest, the fact that it is a viable cryptocurrency coin. And then IBIT is another ETF. Here we are. You can see this black line. I'm sorry, the move back above that 50-day simple moving average. Last up, we'll take a look at BLOK. This is an ETF that has companies that are in blockchain activity technologically. So most notable is the fact that we did see this nice gap up into a base breakout on big volume. So that was another area that I certainly wanted to alert you to. And last up, we're going to take a look by going overseas. This is an area that I talked about over the last couple or several weeks. MCHI, the continued advance in China's broader markets. And from here, we'll take a look at a couple of well-known names that are in this company or in this country that are also advancing. Alibaba had a nice base breakout there. We'll take a look at Baidu, some of the bigger names gapping up. So certainly notable for those of you that may be looking to advance and perhaps diversify outside of the US. And that is it for this week. Everyone have a fantastic weekend. If you haven't already, go ahead and use that link below. You can have a 2-week no-cost view of my twice-weekly MEM Edge Report, all about not only keeping you in front of shifts taking place in the markets, but more importantly, getting you in those names within those shifts that are poised to outperform. Also, if you can hit that like button, you'll be alerted to future videos. And as always, have a great weekend. I'm going to look for you here again next Friday.